This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Race to the finish. Lawmakers unveiling tonight the final version of the biggest tax revision in 3 decades. What's in, what's out, and what it could mean for your money. Record finish. The 3 major stock indexes close the week at new highs as investors cheer a tax bill that will boost corporate profits. Prescription video games. The future of medicine may be taking place in a laboratory unlike any you've ever seen before. Those stories and more tonight on Nightly Business Report for Friday, December 15th. Good evening, everyone, and welcome. I'm Tyler Matheson. Sue Herrera has the evening off. Well, that big tax bill is all set now. Republicans releasing tonight their final signed-off draft of the most sweeping tax rewrite since 1986. And it appears tonight that some last-minute deal-making flipped some no votes to yes, securing what is evidently enough GOP support to turn the 503-page overhaul into law. The holdout, Marco Rubio of Florida, got on board when the child care tax credit was expanded. Tennessee's Bob Corker did the same, saying he believes the bill was a once-in-a-generation opportunity to help the economy. Well, tax reform? Some say it isn't exactly that, but what it is for sure is a huge $1.5 trillion tax cut, with much of the benefit flowing to U.S. corporations. And on that, the major stock indexes rose to record highs. So what's in, what's out? Ilan Mui knows it all. She's covering the story from Capitol Hill, where I think you've pitched a tent the past few days. Ilan, good evening.
It's been some long days
You
and
bet.
some long nights as well, Tyler. Well, Republicans just filed that legislation. This is a major achievement for them, a major victory for that party. And here are some of the top line numbers. The corporate rate is 21%, and it would take effect starting in 2018. For individuals, they would still have 7 tax rates, and the top rate, though, would be lowered to 37%, and it would affect individuals who make more than $500,000 or couples who make more than $600,000. Also, the deduction for mortgage interest, if you own a home, that will be allowed for loans up to $750,000. And for pass-through businesses, they'll be allowed to take a deduction of 20%. Now, as you alluded to, there was some drama here on Capitol Hill with Senator Marco Rubio initially threatening to vote against the bill, but then Republicans expanded the child tax credit in order to get him on board. Also a surprising flip, Senator Bob Corker of Tennessee, who had been the lone Republican in the Senate to vote against a previous version of the bill, he said he now supports it. And now we're hearing from Susan Collins of Maine, who says that she applauds the changes in the tax bill. A little short of saying that she actually will vote for it, but that she does seem supportive of the version of the bill that was just filed. Now, this looks like it will sail, though, to passage. The House is going to vote on this legislation on Tuesday. The Senate will follow afterward, and all indications are that the president would be ready to sign it. Back over to you, Tyler.
All right, Ilan, thank you very much. Ilan Mui covering it for us. Go get some rest. You got another week ahead, I'm sure. So what will the final version of the tax bill mean for you and your investments? Andrew Friedman is principal at the Washington Update, and he joins us to discuss. It looks, Andy, like the Senate and the House have threaded a needle here to keep people happy, to come in under that $1.5 trillion number that made them able to pass it with just simple majorities.
That's true. And you really, I think, encapsulated what was going on here. Under the Senate rules, this legislation couldn't lose more than $1.5 trillion over 10 years. The corporate tax cut, which is the centerpiece of this bill, dropping the tax rate from 35% to 21%, costs about $1.5 trillion over 10 years. So they got what they needed, which was to cut taxes on corporations, which the Trump administration at least believes will expand the economy and help workers as well. Everything else in the bill was a trade-off. For every dollar of taxes cut, there had to be a dollar of taxes increased to stay within that number.
So you point to, and I think most people agree with you, that this is mostly a big tax cut for businesses and large corporations.
Yeah.
The individuals get some cuts as well, low and middle income, but those tax cuts sunset a few years from now.
That's right. In order to make this all work and to keep it within the parameters, there wasn't a lot left over for individuals. So there is a small tax cut for up and down the income line for individuals, but those had to expire to make the numbers work. The key was to keep the corporate tax cut permanent. The administration said that was necessary because businesses have to plan many years in the future. Individuals, they said, well, when the time comes, we think Congress will extend those cuts as well, but we have to leave those in the wind, if you will, in order to make it work now.
One of the gnarliest areas in those corporate tax cuts has to do with the international side of the business. Number one, being able to bring back some of the profits that are held overseas, trillions of dollars there,
yes,
and also going to a different kind of regime that the administration and the GOP believe will cause more companies to stay domiciled in the U.S. Explain, and do you agree?
Yes, let me just talk for a second about what's going on there. Right now, as of today, before this new law, we have a very unusual tax system. If you're a U.S.-based company, you set up a subsidiary overseas to sell your products. So Coca-Cola sets up a company in France to sell soda. The earnings of that subsidiary aren't taxed in the U.S. as long as they remain with the subsidiary overseas. But if that subsidiary repatriates the earnings back to the U.S. parent company, right now we impose a 35% tax. That means that companies are leaving their earnings overseas to avoid that tax. And that's presumably is not as good for our economy. So what the tax bill does is it does two changes here. First, with respect to future earnings overseas from the beginning of the year on, those can be brought back now without any tax whatsoever. Big benefit for multinational companies, bring back future earnings. With respect to existing earnings, those will be brought back at a lower tax rate, say around 14% or so. That brings in a little revenue for the government that they weren't going to get anyway, and it also brings the money back here.
Andy, thank you very much. Appreciate the explanations. Andrew Friedman with the Washington Update.
Thanks, Tyler.
Well, on Wall Street, the Dow reached its 69th record close of the year, the most since 1995. The Nasdaq and the S&P 500 closed at all-time highs as well, driven by gains in financials, healthcare, and technology. Here are the final numbers for you. The Dow Jones Industrial Average gained 143 points to 24,651. Nasdaq added 80. S&P 500 rose 23. The Dow and the S&P 500 now have logged 4 straight weeks of gains, and all of the indexes were up this week. Well, investors do like the idea that companies will get to keep more of their profits under the GOP tax bill. And as Andy Friedman was just saying, multinationals will get to bring back earnings stored overseas at extremely favorable rates. So that begs the question, which sectors could benefit the most from a change to the corporate tax code? Dominic Chu did some digging for us.
If you're wondering what kinds of companies might actually benefit the most from any potential tax reform legislation that cuts corporate taxes, check out these industries. The folks at Goldman Sachs took a look at the S&P 500 and the sectors within it and looked at who pays the most in taxes effectively. So let's take the number 10 end of the spectrum here, the ones that pay the most in taxes, possibly beneficiaries if taxes get cut. The bigger beneficiaries. The highest taxes are paid by the energy sector, 35% effective rates. Telecom, 33%. Industrials, 32%. Utilities, 31%. Consumer discretionary, 30%. These are 5-year median average effective tax rates. Take a look at the next batch. Consumer staples, 30%. Number 4, financials, 28%. Number 3, materials, 27%. Number 2, healthcare at 26%. And then a sector in the S&P that pays the least in terms of taxes overall on average, the technology sector at only 24%. So if you're looking for the outsized beneficiaries of possible tax cuts, it's the ones that already pay a lot of at least taxes right now, and that's energy, telecom, utilities, and industrials, that side of things. Now, as for some of the stocks that could benefit, Goldman also has a basket of around 49 names that they call their high tax basket, the ones that pay the most in terms of effective tax rates. Among the names on that list, ConocoPhillips on the energy side, 49%, Goodyear, 46%, J.B. Hunt, 38%, and Zions Bancorp, 35%. Those are among the names on the list, a sampling to give you an idea of the kinds of stocks we're talking about. Still, as investors look towards tax reform and how to play it, so to speak, some of the beneficiaries, if taxes get lowered, could be the ones that are on these lists here, guys. For Nightly Business Report, I'm Dominic Chu.
And still ahead, if you're in a rush to find a rental, maybe a robot can help you. TD Ameritrade will start offering Bitcoin futures on Monday, just 1 week after they debuted on the CBOE. To trade, you must have a minimum balance of $25,000 and post margin or collateral. That's more than what the CBOE requires. TD Ameritrade has the largest futures operation of any online brokerage. Well, the president of the Chicago Fed is concerned about the low level of inflation in the U.S. Charles Evans said today that's why he voted against raising interest rates at the most recent Fed policy meeting. Inflation has been below the central bank's 2% target for much of the economic expansion. Evans and the president of the Minneapolis Fed were the two dissenters at that last meeting. And in an unusual move, the vice chair of supervision for the Federal Reserve will recuse himself from matters related to Wells Fargo. Randy Quarles said he has repaid a business line of credit with the bank and sold company stock he owned. Quarles wants to avoid a potential conflict of interest and added that his decision is voluntary, not legally required. Well, today is the last day you can sign up for health insurance under the Affordable Care Act. A shorter enrollment period and a reduced marketing campaign will likely result in fewer enrollments this year. The final numbers for the federal exchange won't be known until next week at the earliest. Figures from the states that run their own marketplaces could come even later. Well, if you are a parent, you probably worry about the time your kids spend playing video games. But as an emerging area of medical research is happening right now, and it is looking at whether the effects in some cases can be used to treat certain conditions. Meg Terrell has our latest story on modern medicine.
These aren't your typical drug developers. Instead of petri dishes and beakers, the team at Achille Interactive works with coding, music, art, and algorithms. They're programming video games as potential medicines.
My prefrontal cortex feels very exercised.
We want this to be on the proverbial shelf next to pharmaceuticals.
Achille, a Boston area biotech, is developing video games that it hopes can be prescribed to treat conditions from ADHD to depression. The company reported results last week from a late-stage clinical trial in ADHD, which affects more than 6 million kids in the U.S. The study showed that Achille's game improved kids' attention and inhibitory control.
The results, I think, showed us that pretty clearly we can have a significant impact on attention function.
Dr. Adam Ghazali has been working on this idea for a decade at his Neuroscape lab at the University of California, San Francisco.
The original hypothesis was that if you could challenge your brain at this high level that activates the prefrontal cortex, the most evolved part of our brains, and its network with the rest of the brain, you can have improvement in other aspects of cognition, like how we sustain attention.
Currently, treatment options for ADHD include behavioral therapy and drugs like Adderall, Ritalin, and Vyvanse, a market that generates about $4 billion a year. Experts say new options would be welcomed, as long as they're validated.
The idea of a child sitting down and playing a game is remarkable and would very much kind of change the landscape. But I would want us to kind of look at it from a skeptical lens.
Achille plans to file for FDA approval early next year. One thing working in its favor, fewer serious side effects than traditional drug treatment. The main issues reported in this study were headache and frustration. These games, which couldn't be shown in detail as the studies are ongoing, aren't easy, as I learned when I tried out some demos. For Nightly Business Report, I'm Meg Terrell.
Shares of CSX get derailed as the company's CEO takes a medical leave, and that is where we begin tonight's market focus. The railroad company announced its CEO, Hunter Harrison, will take medical leave due to unexpected complications from a recent illness. The company's COO, Jim Foote, will serve as the acting chief in the interim. Shares of CSX fell more than 7.5% on the news to finish the day at $52.93. Starting next year, Sirius XM Radio will pay more for the music it plays. The Copyright Royalty Board raised the satellite radio's rates to 15.5% of gross revenues for the next 5 years, up from 11% now. Investors in Sirius XM tuned out. Shares dropped 5% to $5.37. Adobe reported record revenue in its fourth quarter. The software maker posted a revenue of $2 billion. That's up 25% year over year. Adobe's CEO attributed the growth to continued strength of its digital media business, which houses its Creative Cloud product.
People are now really focused on ensuring that the engagement that they have with customers, whether that be through the Internet of Devices, whether that be through digital screens in retail stores, whether that be through autonomous cars, is a personalized, engaged experience. And we've identified that as one of the big growth opportunities for us.
Shares of Adobe rose nearly 1.5% to $177.51. And after the bell tonight, activist investor Elliott Management disclosed a 6.5% stake in cloud services provider Akamai Technologies. The hedge fund says it plans to consider strategic alternatives for the company, including a sale. Shares of Akamai spiked following the news, adding on to a nearly 2% gain during the regular session, where shares closed at $57.76. Well, our market monitor tonight likes companies he says can continue growing their dividends and has names he says could benefit from any potential tax cut. It is his first time as a market monitor. He's Eric Irvin, president and CEO of Reality Shares. Mr. Irvin, well, great to have you with us. Don't be nervous here. It's just your first time. We're friendly. We don't bite. What do you think about this tax cut and how it's going to help corporations, just broadly speaking?
Yeah, so just generally, it's more cash to the company means more cash to the shareholders in one way or another, whether it comes in the form of dividends or whether it comes in the form of reinvestment back into the business. So it's a great thing for shareholders for sure. If you think about it in general, you know, whether we get it from the repatriation, where we have, you know, $1 trillion overseas in repatriated potential dollars, or in just those overall growth rates of these companies growing, you know, because right now the market's a little stretched, so we need to look for growth right now. All
right, let's get to your picks, shall we? Leading off with MasterCard. Tell me why you like it.
You know, we're a dividend shop. We like to focus on companies that can grow those dividends significantly. We found that to be one of the biggest drivers, and MasterCard is an excellent grower in that category. They grew their dividend almost 53% per year for the last 5 years. That's per year. Their return on equity is off the charts. It's 73% ROE. And they have almost $5 of free cash for every dividend that they pay out. So we feel like that's the kind of company that can actually grow their dividends quite a bit. And not to mention, they're really getting involved in this blockchain technology, and really that could be a massive wave of innovation for them as well. So we're excited about that.
All right, let's move to your second choice in the tech area. It would be Texas Instruments.
Yeah, also a strong company, good high free cash flow to dividend ratio, almost $2 of free cash flow for every dollar of dividends, so really strong in that regard. 25% dividend growth year over year. Texas Instruments is you know, one of these sleepy tech companies that we don't think about too much, but really it's a strong stock that's innovating in a number of different categories. Also kind of in that blockchain arena as well. So we're just keeping an eye on that technology.
And a lot of people love NVIDIA, and you're one of them.
Yeah, and NVIDIA has been in our portfolios for now a little over a year, and it made it into the cut this year. Every year we rebalance our portfolios. And NVIDIA is one of those stocks that, you know, as you buy it, you wonder, am I paying too high of a price? But when you dig down and you look at the numbers, these growth rates are just off the charts. 81% earnings growth last year, averaging 50% dividend growth, return on equity 44%. $4 of free cash for every dividend that they pay. So it's not only a growth stock, but it's a growth stock that's a high quality earner. So, you know, if you're going to pay up at a multiple, do it with a stock or a company that can grow its earnings, and NVIDIA is one of those.
You're in San Diego. It's 27 and snowing here in New York. Eric Irvin, I envy you. Eric is with Reality Shares. Appreciate your time today.
Thank you.
You're shopping for a rental home and you need to see one right now, this minute. There may be a robot ready to show it to you. A California rental management company is offering home tours at a moment's notice. Just don't expect anybody to Be there when you get there. Diana Olick explains.
Avishay Madani is a millennial, so she's used to doing everything on an app.
Weird.
But this was a first.
Rabia, nice to meet you.
She took a rental home tour with a robot.
There's hardwood floors.
Kind of a robot with a rental agent.
All right, I'm gonna do it. Yes!
Yep, even in the bathroom. It's the latest high-tech offering from Zen Place, a San Francisco-based rental management company.
What our robots really do is reduce the leasing period and cut down vacancy times for owners and make it a much easier process for tenants who can now literally go from seeing a place that they like to renting it out in a matter of minutes versus the days and weeks it traditionally took.
Zen Place developed the app for the robot. There is a human agent on the other side, but the robot can also provide the customer with real-time data on the neighborhood, amenities, and rental trends. It also has a lease application built in to apply on the spot.
Thanks, Rabia. It was fun. It was definitely weird.
Weird, perhaps, but efficient.
I've gotten to be more used to having to do everything through apps and technology, so it's kind of nice to make it convenient, and I didn't have to wait on anybody else, and I was able to do it in my own time frame.
The technology allows people who might just be driving by a home see it immediately. Of course, it only works for rentals because they're usually empty, that is, nothing to steal. But it does raise the question of safety for the potential renter walking into a home alone.
We ask you to quickly take a picture of your ID, and then we instantly verify who you are and check your background. And if it all comes clear, we send you a unique code that you can then enter into our smart lock.
It didn't even feel like there wasn't somebody there because she was in the room with me.
Zen Place currently offers the robot rental service in California, but will soon put it in rental homes in 5 other states, including New York and Florida. If it catches on, it could open the door to more robots in real estate. For Nightly Business Report, I'm Diana Olick in Washington.
To read more about robot-driven home tours, head to our website, nbr.com. Well, coming up, feeling the force, the big money behind and in front of the latest box office blockbuster. Here's a look at what to watch next week. Housing will be in focus with the release of existing and new home sales, as well as housing start numbers. FedEx reports earnings Tuesday. FedEx is often viewed as a bellwether for economic conditions, and Friday's the deadline for lawmakers to pass a funding bill that would prevent a government shutdown. And that, folks, is what to watch next week. Well, SpaceX successfully launched a refurbished rocket. The company's previously flown Falcon 9, along with a used cargo capsule, are headed to the International Space Station. It is the first time this has been allowed by the government. Reusing space hardware is the crux of SpaceX's business model, and it's at the center of the new space race, since, of course, it helps lower costs. SpaceX's founder is Elon Musk, who is also the CEO of Tesla. Well, The Last Jedi stormed into the box office today, and the company behind one of the most successful movie franchises ever could see an enormous payday. Julia Borston follows The Force.
Disney's Star Wars The Last Jedi grossed $45 million in North American theaters in Thursday night previews. That's the second biggest Thursday night opening ever, after only Star Wars The Force Awakens 2 years ago. The box office benefited from more than 1,300 fan and marathon events last night, and today the movie is expanding to nearly 3 times that number of theaters in North America. This puts The Last Jedi on track to bring in over $200 million in North America this weekend, which would make it one of the biggest opening weekends ever, bolstered by rave reviews, including a 93% positive critics rating on Rotten Tomatoes.
I think it's definitely going to stay at the top of the box office through the holidays into January. That's what we've seen previously with Star Wars movies like Rogue One and especially The Force Awakens. And I think what it says for Disney is that, you know what, this Star Wars brand is very strong and you can continue investing in it, you know, year after year.
And The Last Jedi's success this weekend should be even more valuable to Disney once its acquisition of Fox, announced just yesterday, goes through. Fox owns the rights to the original Star Wars trilogy, plus the prequel trilogy. Disney CEO Bob Iger saying the company is looking forward to reuniting all of the Star Wars movies.
Disney could mine characters from those first 6 films to fuel its consumer products powerhouse. Star Wars is already the biggest toy brand ever, with $3 billion in total licensed merchandise sales projected this year, according to TTPM, further growing the brand's appeal to multiple generations of fans.
A lot of those adults that are taking their kids are the adults that grew up with this franchise, with the original trilogy, and that is what these new films are hearkening back to. And so those adults have kids, they're taking their kids, they're getting their kids excited about it, and so it just continues the life cycle of Star Wars.
Plus, the original 6 films could be valuable to the 2 Star Wars lands opening in 2019, Disney investing in over $1 billion in each of them. Plus, having all the Star Wars movies will boost the appeal of the Disney-branded streaming app launching in fall of 2018. For Nightly Business Report, I'm Julia Borston in Los Angeles.
I wonder if The Last Jedi really will be The Last Jedi. Whatever. That's Nightly Business Report for tonight, everybody. Thanks for joining us. I'm Tyler Matheson. Have a great weekend, everybody, and we will see you back here on Monday.